One. Yo, what's good, people? It is currently 13 minutes past 10 p.m. UK time, Sunday, the 29th of June, 2025. Welcome to another amazing episode of Technically Speaking, which is a free weekly macro stocks crypto webinar that I host. My name's Fadlan, or I go by Ninja T online, and I'm one out of three founders of Blockchain Sensei. We are a blockchain, crypto, and financial literacy education and consultation company. We do this webinar every single Sunday, 10 p.m. till 11 p.m. UK time. And I will be running this webinar for the remainder of 2025. You can catch the free Zoom in the blockchain.sensei Instagram bio. That's blockchain.sensei. Watch out for fakes, as there are many fake scam profiles under mine and Blockchain Sensei's names, which historically and inevitably in the future will take tens, maybe thousands of dollars of people. So please be very careful. What else? Yes, nothing in this video is financial advice. First of all, before I carry on speaking, can everyone hear me clearly? Yes, amazing. Nothing in this video is financial advice. I am not a financial advisor. I do not intend to be perceived or received as a financial advisor. I have no financial qualifications. I don't even have a degree. I am just somebody who has been very interested in macro markets, originally FX and then into stocks and then finally into crypto for over a decade now. I choose to share my research because first and foremost, it forces me to provide information, which then forces me to level up as a practitioner. I'm currently going through Professor Adams' crypto masterclass at university.com, which I'm halfway through. That's been pushing me. I will share some data that I got from the course on today's webinar, including an indicator called the DMI. What else? I think that's everything. Yeah, let me start off with this. So before I get into how I usually structure this is I usually go over macro data sets, mainly liquidity, then I check on-chain data, then I do technical analysis, and then we go over the news, and then we do AMAs. You should come to this webinar live because I will stop recording at some point, and then I'll do the AMAs off recording, and then also talk about meme coins, which I don't talk about during live. So the first thing that I want to bring on board before getting into my main section is I just want to talk about this little kind of very important mindset hack, and that is visualization and belief. So visualization is very important because if you cannot visualize something, it basically doesn't make sense. The first step to understanding something is being able to visualize it. At the highest level of understanding is being able to teach it, which is why I teach stuff, right? So, especially when it comes to numbers and facts and figures, try to visualize the data set. So the first data set, which I'm just gonna say on this webinar, and it's literally like the first lesson that I teach all my students, is the visualization of assets, right? And asset classes. So I'm gonna use my hands. Real estate is the biggest asset class in the world, with, last time I checked, around $350 trillion of valuation. The second biggest the second biggest market sector, I don't know if it's asset class specifically, but the second biggest financial thing in the world is what? Let me ask the people here. Who knows what the second biggest financial...
Is it stock market?
No, it's debt.
Oh, okay.
It's debt, right? Now, what's very important to know is that we have recently hit all-time highs of debt. I don't know if I tweeted it, but basically, world debt recently hit an all-time high of $324 trillion, right? So this is real estate. Let me take up my whole screen. And just below real estate is debt. Now, after debt, we have the bond market. And after the bond market, we have stocks. And then after stocks, we have cash. So approximately $130 trillion or something in the stock market, and approximately $110 trillion of cash. So understand that there's more value in stocks than cash. There is 3 times more debt than cash. There is over 3x valuation in real estate than cash. And then we've got the cryptocurrency market, which is the market that most people watching this video are most interested in, at around $3 trillion. Now, because we have finally, well, we are at the highest cusp of forced money printing ever right now, as in the debt ceiling in America particularly is the closest it's ever been to forced money printing, forced quantitative easing through mainly the reduction of interest rates, which has not happened during this entire bull market, right? I call it a post-election delayed bull market with ultra choppiness because, like many practitioners in the market, especially OGs who've been in the market longer than me, will agree that this has been one of the most interesting, unexpected 2 quarters in human history. Mainly because of tariffs and Israel-Iran 2-week war. So please always try to visualize those facts and figures if you need to put it in a pie chart or whatever. But one of the most important visualizations that I want everyone here to imprint in their mind, it's asset classes. Real estate, debt, US government bonds. And then when you go to the stock market, it literally does this. Stock market, cash, gold and oil, crypto. Okay, so that's one visualization. The second mindset thing that I kind of wanted to, I kind of want everyone to imprint in their mind is the mantra that you are a student, you are a lifelong student of the markets. You are a lifelong student of the game. That you will, as an individual, continue to study what's going on in the market and particularly backtest and look at history. Because when you understand these 3 things, when you constantly improve on your fundamental knowledge, so fundamental knowledge could be understanding of individual assets, and or fundamental technical analysis, such as chart patterns and indicators. You keep up to date with what's currently going on, which you can use AI as a cheat code. I particularly recommend Grok, the Twitter AI or X, because you can ask it basically. I ask Grok every single day, update me on what's going on in the past 24 hours in crypto. That one prompt, update me what's relevant in geopolitics, crypto, and stocks. It is one of my original protocols that I go to when tapping in the market in the morning versus most people that go to news sources and let the news present the information to them. I ask AI what it thinks the most important headlines are, and I take that information first because it's more tailored, right? So what's going on right now? Fundamental understanding of assets and just general skill set of being able to read the market better, and backtesting, which is historic, looking at history and what happened. When you study history, you are way less surprised on what happens in the market, right? So those are 3 things I wanted to bring up. Let's go into the harder information. I'm just going to come off camera. Can everybody still hear me?
Yeah.
Yes? Okay, amazing. Right. Let's go. Let me go back. Tweet from the 22nd. Actually, no. Let's start off with tlx.pgsolutions.net, which is, as I say on every Technically Speaking, one of my first protocol websites to go to. This is a website that basically nobody knows about, and it tells you the available liquidity within the Fed, which is the American government, and you will find that this basically price action on risk on assets kind of follows liquidity. So we can see here that there's been a pullback in liquidity, which is probably one of the reasons why we have had some sideways chops, especially in the crypto market. So this here represents liquidity. This here is the TGA, which is the savings account, which typically has an inverse relationship in the mid to long term with liquidity. We can see here we've had a pullback in liquidity, but also interestingly a pullback in the TGA. So I'm just waiting for TGA to pull down further and liquidity to rise, and or TGA to go up and liquidity to fall down. So these trends will usually align with themselves. One of the other reasons why liquidity's been going down is because we seem to be following this end of month trend where the reverse repurchase agreement seems to spike towards the end of the month. What I expect to happen is, and we'll see if I'm right or not in the next week or two, for this to come down into the start of July and liquidity to be pumped. Next of all, sorry, 1 second. Okay, so let's have a look at the tweets that I've done on Blockchain Sensei Twitter. By the way, follow Blockchain Sensei on Twitter as where are we? This is where I tweet a lot of data. So one of the biggest things, and I don't usually do qualitative news at the start, but this can absolutely not be ignored. Basically, Pudgy Penguins, which is arguably one of the most important, as you can see, this is me at the Pudgy Penguins event in Hong Kong. So basically, Pudgy Penguins, which is one of the biggest intellectual properties in crypto, a multi-million-dollar intellectual property outside of crypto, as the toys are sold in every single Walmart in the United States. And of course, there's the Pudgy Penguins and Low Pudgy's NFT collection. They've also bought OpenSea, which is the biggest NFT website in the world, basically the equivalent of eBay for NFTs. They have, with Van Eck, which is, I believe, they're 1 out of 11 or 13 Bitcoin ETF, spot ETF providers. They basically did the opening of the Nasdaq, which is top 100 US tech. This is early signs, in my opinion. This is early signs of pre-euphoria, when basically shit like this happens. This is something that I absolutely cannot ignore. And later on, I will go into why I believe, even though I was a little bit late to the thesis, that Pengu, basically everything in the Igloo ecosystem, which is basically Pudgy Penguins, Low Pudgy's NFTs, Pengu meme coin, and Abstract Chain, which is an Ethereum layer 2, are everything within that ecosystem you want to highly consider, in my opinion, diversifying in your portfolio too, as an extreme beta to crypto and altcoins. I dropped a video called Easiest Crypto Investment of 2025, which was 6 months ago. Now, I admit this is probably a bit too early for its time, but such things brewing in the market, and I will have a look at price action. Very, very exciting. Low Pudgy's NFTs right now are like 2,500, like 1 Ethereum. I think they could be one of the most lucrative investments of the cycle. Okay, so Circle stock is surged 750% just after IPO. So there's basically 2 huge signs to me that crypto is gonna go ballistic this year. I'm even working with one of my clients who has for the past kind of 6 months, been working on a stocks portfolio with him, and recently I said to him, "Look, you've got eToro, You've got access to 160 cryptos. We definitely need crypto in the portfolio. So let me show you my kind of macro thesis. Okay. This. So some of you guys may have noticed, or if you've been paying attention, that Coinbase stock has been absolutely ballistic in recent times. In the past, what's that, 2.5 months, we've done a 2.6x. This low here was, of course, in line with global risk-off sentiment. This is the tariffs, right? And Israel and Iran war basically did not affect Coinbase, and then we've had the pump since the ceasefire, right? So let me just do naked charts. One thing I like to do is I know a lot of people, a lot of technical analysts love to rely just on indicators. I like to look at indicators second to naked chart patterns. No, why is the matrix stacking right now? Okay, let's remove this. All right, so let's compare two charts. The top chart is Coinbase stock, and then this chart here is the crypto total market cap. Okay, we can see that the lows pretty much match up. Okay, 12th of December. Highs match up, lows match up here. This low matches up here. Something like that. Yeah, so we can see that Coinbase is now basically at all-time highs, almost all-time highs from November. Definitely smashed the highs of December. Crypto total market cap has not done that, but Bitcoin has still been leading the way with Bitcoin dominance at all-time highs. We can see that if I compare Coinbase to, for example, Total 3, which is all the money. Oh, sorry, my bad. Coinbase, if I compare this to, for example, Total 3, we're quite a bit further away from these highs at the start of the year, right? About 37% off. So, this is an early sign. And then the other early sign is that Circle, who basically own USDC, their stock. I mean, this is a historical run. That's 4.5x from the 5th of June. According to Cycle, is 750%. So maybe a different provider. I don't know. But this is basically the company that own USDC. And these stock pumps are basically early signs for me, including other data sets, not just price action. We're going to look into this more with some on-chain data and liquidity data. But it's things like Coinbase stock doing this. Is that 3x or 1 point? Yeah, there's 2.7 x move from these lows in April, and also Circle, the company that own Coinbase, before the actual crypto total market cap catches up with even the highs earlier this year, are early indications for euphoria to start kicking in. I don't want to sound like a broken record, but the time is coming. Okay, so let's have a look at some more tweets. This is from Axel at Crypto Quant. Over the past 24 hours, the composite sentiment index has been under bearish pressure and corrected to a local minimum of minus 20%. The maximum reading over the past month. The negative delta of sentiment is partial by also positions, and players decide to catch the pullback. Nevertheless, caution remains in the market. Okay, what did I see from this? It's basically predicting a low on the 23rd of June, and for us to go higher. What else? Oh, stablecoin dominance. Yes. Okay, so what you guys can add to your trading view indicators is USDT and USDCD, which is basically the dominance. The dominance typically has an inverse relationship with crypto price. So, not USDT, but USDT dominance. We can basically see here that this has been on a downtrend, making a lower high since this key date here, which is what? Early April, which is basically tariffs. And then what I can do here is, please take in what I'm saying to also add to the way you do analysis. So typically what people like to look at is the DXY. This is the global standard. And it's basically the strength of the dollar, which again has an inverse relationship typically with risk on assets. Risk on assets being what we're most concerned about in this webinar, and that's stocks and crypto. So if you look at the DXY and USDT dominance, sorry, my bad. Yes, will be DXY here, and then over here we'll do USDT dominance. Okay. What correlations do we have? You can see here that DXY was falling, and interestingly, stablecoin dominance increased. On this high here, we've seen a fall in the dominance and a fall in the DXY. So they don't exactly correlate all the time. However, what I wanted to bring up was typically people look at DXY as a risk on and risk off indicator. The world is telling us that we've become more and more risk off as one indicator because the DXY has been falling. However, due to geopolitical tension, this fall in the DXY, which often on a technical basis would translate to a rise in asset prices, as you can see, it's been falling since the start of January till now. Unfortunately, this has not equated to a smooth sailing rise in risk on assets, though it is reflective of risk on assets such as NASDAQ being at all-time highs, as we are on the yearly low of the DXY. But it is interesting that stablecoin dominance is decreasing, which is further indication of bullish momentum, because if you think about it, as the whales hold less and less stablecoin, it means they are what? It means that they are more and more invested into the market. With Bitcoin still leading the way, as Bitcoin dominance is at continuous highs. I do believe that we will finally touch around the 70% zone, and I've said this before. And then when this declines, this is when altcoin season starts. When did this historically happen? We historically climbed until January 2021, and then we sharply fell all the way into November 2021. And this was the entire of the previous bull market. This was the previous bull market. And December 2017 to January 2018, this was the previous bull market also. Okay. Where was Bitcoin here in January 2021? Bitcoin was around 20K. Let me go back to that chart. What chart was we on? So brain freeze. The chart we were on was DXY. Yeah. No, sorry. Bitcoin dominance. My bad. Brain life. Bitcoin dominance. Yes. Okay. So look.
one of the best things you can do is compare charts together. This is one of my favorite backtesting pastimes. So 2017 to 2018. Okay, let's go. So I need to really, really zoom in here. Look at this price action. This is the start of 2017. Oh, my bad. This is the start of 2017. This is the end of 2000 and this is the start of 2018, basically. So in the time that the Bitcoin dominance fell is when the real bull run happens. Bitcoin dominance falls, the real bull run happens, right? Bitcoin dominance falls here, around here, it starts falling. It starts falling for 1 year, and where does it end the year? Here, up, up. Bitcoin dominance falls, and the real Bitcoin price goes up, and altcoins go absolutely ballistic. Okay, so next thing I wanted to talk about, and I taught this to one of my clients recently, is when you are looking on your indicators. This is a fundamental lesson for you guys. So typical indicators we use, of course, are RSI, the MACD, and I'm going to throw in a new one, which I used to love this indicator, and then I forgot about it, and now I've regained my love for it. It's the DMI, Directional Moving Index. With the DMI, I like to go to the settings and then take out the red line. The ADX doesn't really do anything. So, DMI, this is a directional moving index, and basically, when the blue is above the orange, it is an indicator of bullish momentum, and vice versa when the orange crosses the blue, right? Now, when learning about indicators, and also when investing and trading assets, have a think about if it falls into these two types of analysis, and that's trend following and mean reverting. So trend following would be following momentum, and mean reverting would be, for example, if you buy an asset here, it has a high, and you're expecting it to revert back to the high at some point. This I never really thought about this until recently, but now I start thinking about my indicators as follows, right? So the DMI only is what I like to what I've learned to be a binary indicator. So binary meaning that there's only one mode, which is up or down, right? It's a binary metric. Blue over orange means it's going, doesn't mean it is, but it's an indication that the market's going up. And the red over the blue is a binary, indicating whether we go that we go down. Whereas a perpetual indicator would be something like the RSI, where closer to 30 is a stronger buy indicator, closer to 70 is a stronger sell indicator, but it's not binary because we have a range of signals in between, right? Maybe we could create a rule, and I've taught this to my students before, where we don't have to wait for 30, but we consider buying in at, for example, 40. And we don't always wait for 70 to sell. We could consider selling within the 60 to 70 range. So this is something that I don't want to go into extent too much on here, but something that I have never thought about until recent times. And that's just thinking of my analysis as trend following, mean reverting, and then with the subcategories of perpetual and binary. So I'd say ask AI. I don't want to do a huge segment on this, but this changed the way that look at analysis and portfolio structure, particularly with, am I investing in this asset because it's trending upwards? Am I exiting because it's trending downwards? And or am I investing in something that I believe to be mean reverting? And right now, in this, what I believe to be pre-euphoria, mean reverting assets are where you want to start deploying capital into, because even though the trend is your friend, I do believe that you can miss on exponential gains by not investing in highly undervalued mean reverting assets, which I'll get into more when we do an altcoin section later on this webinar. So this is just a reminder that basically all cryptos are pretty much the same. Nothing is special. I'm not team XRP. I'm not team anything. I'm just team macro, knowing when to be risk on and risk off, when to hold cash, when to scale in, when to not scale in. And I'm looking to scale in a lot. Soon. So Thomas on Markets, who is arguably the most important person to follow on Twitter when it comes to analysis. Just drink some of my coffee. Every single time he tweets, it is very, very valuable. So let's take a look at his last two tweets. Financial conditions are officially loose. I haven't posted an update on my financial conditions indicator in a while. We are officially back to loose. Green, below zero. So this is, guys, always remember, never, ever, ever look at one damn metric. Do not hold on to one person saying anything. You should absolutely be on what I like to call information aggregation. Listen to people, including but not limited to myself. Read what Thomas says. Listen to Blockchain Backer. I'm going to go on a little bit of a tangent. So, Blockchain Backer is the greatest crypto macro content creator in the world. Way smarter than me. Way more experienced than me. Watch every single video he ever drops. You will be on top. So I'm gonna say Blockchain Backer, Earn Your Leisure. They do a show once a week called Market Mondays. So I watch their show every single Tuesday. Blockchain Backer has Markets in the Morning every single Wednesday. I watch that stream, and then he drops videos on an ad hoc basis at his discretion in between the Wednesdays. And then who else do I watch? I'll give another guy away. Gareth Soloway, top OG, hedge fund manager, private equity, all of that. I watch him a lot, right? So you should be aggregating information. Please never ever hold on to what one person said or one chart says. This is just because we are officially back to loose, which is below green, right? And even though I'm saying we're bullish, doesn't mean that a catalyst can't happen tomorrow that crashes the market, right? We have to act on the best information possible. Did I make loads of money on Coinbase going up? No, unfortunately. No, I didn't. But all I can do now with this information of Coinbase going up by so much and Circle doing hundreds of percent, again, the company that owns USDC, the second biggest stablecoin in the world, I can only go off that price action and information to lay me a blueprint of where I think liquidity, money is going to spill into, which is crypto and altcoins, right? So I digress. Back to here. Here is a deeper look showing all four separate components. The VIX, which is the volatility index of the DXY. This thing here, right? Spiking up just means there's lots of volatility. Downwards and sideways means there's less volatility. It doesn't necessarily mean up or down. It just means, you know, how much price action is going on. So the VIX is in red, the move is in green, and credit spreads, which I'm not the most educated on, so I won't comment. Yeah, so basically saying that we're going into more loose conditions, so more risk on, basically. What is the financial conditions indicator? It's an equal weighted composites. Don't know what that means. Of these following data sets, and I don't know what these mean, so I'll skip. It attempts to capture whether financial conditions are loose or tight. So basically risk on and risk off. The TLDR is you got to ask yourself, are we in a risk on or risk off environment? And if we're on risk on and risk off, how much risk is the market on right now? Right now, I believe the market is relatively risk on and pre-euphoria. So there is something called the copper gold ratio. Most of the time, we look at assets in the value of $1. However, it is also important to look at assets against each other. For example, one ratio that I like to look at is the ETH-BTC ratio, which is the price of Ethereum in Bitcoins. Right now, it's 0.02 Bitcoins for one Ethereum. As this chart goes up, it means that the dollar price of Ethereum is outperforming Bitcoin. So, for example, when this gets to 0.055, it means it now costs 5% of a Bitcoin to get one Ethereum. Right, so I digress. Back to here. This is the chart, the copper gold chart. So basically the price of gold in copper. It's up 16% from its low on April the 11th. Again, what happened at the start of April? Tariffs. Okay, tariffs had not been sorted out yet. Why is the copper gold ratio important? Why is it important to know when essentially copper is outperforming gold? It's very important because it's very important because the strongest periods of performance for US stock indices have historically coincided with the rising prices of copper gold ratio. Basically, when this goes up, risk on sentiment increases. As we can see here, we have basically reset the copper gold ratio. This was the 2021 bull market. This, oh my God, right. This was the 2017 to 2018 bull market. This was a 2021 bull market. Okay. This was a 2013 to 2014 bull market. The annoying thing is right now is that the whole 4-year cycle has been broken because it's taken in more than 4 years for asset prices to go up, which is why people are losing interest for the market. But this is good. We need to be very interested. You need to be very, very interested in the market right now at the cusp of this going up. There is 20 to 50 data sets. I could stream for 5 hours if I wanted to talk about confluence of pre-euphoria. But unfortunately, I don't have that time. Okay. So this is just another data set of basically pre-euphoria. The copper gold ratio reaching a bottom and going up. That's a TLDR on Thomas. Okay, so Julian Battelle, who's the head of Real Vision, if you know about Raoul Pal. He's kind of Raoul Pal's right-hand man. Let me have a look at some data sets that he published for, I think MIT is like a tech university or something, like a fintech university. This week, we got the June data for the first regional Fed PMI, the Empire Manufacturer Survey, blah, blah, blah. What? Why I read through this? Okay, let me think about timelines. Okay, what does this mean? The Empire Manufacturing Survey, general business conditions in 6 months' time. So this basically predicts. This is a, I believe, like 6 months looking forward indicator of such, predicting that this is a 2021 bull market. This is, I guess from here to here, 2018 bull market. 2017, sorry, 2013 bull market. So basically, it's predicting that we're going to go up, and it's just another confluence of pre-euphoria. Okay, let me skip this. This. Okay. All right. Okay, so this is the black line represents the 5-month lead. This represents the year-on-year returns of Nasdaq, and the TLDR is that we're predicting we're going up. Okay, so okay, I don't want to go over this because that's a little bit complicated. Trump on the ceasefire. If anyone missed this tweet from him, Israel and Iran came to me almost simultaneously and said, peace. I knew the time was now. The world and the Middle East are in real winners. Basically, follow Trump on Twitter, as basically what he says can move market sentiment very, very quickly. We can also see here that this data set from Sentiment Trader, another measurement of risk appetite index. We have just hit the reset low on this risk appetite index. Let's have a look at some tweets, mainly for the live stream. This is basically, I believe this is a liquidity projection from Cross Border Capital, who are a very well-respected financial data company, and they basically predict from their liquidity models that liquidity is going to continue to rise throughout the year, which will put Bitcoin at a price of around 170K by the end of the year. My professor thinks Ethereum's time has come. All liquidations, courtesy of CoinAnk, are towards the upside on the 1 week, 2 weeks, and 1 month, with very thick liquidations at around 112,000. Okay, so let's have a look at this here. So 42 Macro, by Darius Dale. They publish a report every single day, which fortunately I have access to via university.com. This is their global macro risk matrix. Okay, now let's notice these 4 colors here. So we have Goldilocks, which is the highest level of risk on, and then we have reflation, which is the second level of risk on. Then we've got inflation, which is the first level of risk off, and then we've got deflation, which is a stronger which creates a stronger risk off environment, right? So if you think kind of like 4 levels, we can see here that according to their model at the moment, we have Goldilocks, which is risk on with a disinflationary bias, and reflation right here at the top. So basically, macro predicting that they are way more than they are very, very certain that the market is turning on risk on. That's basically the TLDR. Now, let's get into some on-chain metrics. So for those that have been to my webinars before, you guys know that I swear by a website called charts.checkonchain.com. And I have fortunately provided you guys not just the screenshots, but I'm kind enough to provide you all the links to my screenshots. So let's have a look. So we have the we have the short-term holder, MVRV, and SOPR indicator. Basically, if you pay attention to where this chart tends to reset and top out, it's often an indication of tops and bottoms. And we've recently hit a reset in the short-term holder supply, which is Bitcoin holders of 155 days and less. Another metric, which is basically all these metrics are very, very similar. I don't want to get too into the abbreviations, etc. But the easiest way you can read these indicators, right, without understanding them too much, because it's not like I really understand all the maths behind it. A lot of it is behind my comprehension. Is just looking historically at when they hit certain supports, what happens to price. We can see here that short-term holder supply and profit and loss. We have recently hit this break-even zone, meaning that holders of Bitcoin of 155 days have recently broke even, which is a nice reset in the market. Bitcoin being one of today's greatest proxies of risk on sentiment. The fact that Bitcoin was basically going sideways, and now it looks like it's breaking higher and trying to make a higher high. In the midst of Iran and Israel, has shown that yes, there was a sell-off, but the market priced in a recovery, in which, thank God for our asset prices and for the goodness of humanity, has seemingly been resolved. We're very, very far from the high on this topping model. Bitcoin futures open interest still remains low. So this is basically futures trading, so meaning that all price action or most price action is spot driven, basically institutionally driven. Last time this went up by a lot, what happened to the price of Bitcoin? Went from 60K all the way to 100K. We have never had such interest in futures, which, as I say in previous webinars, exacerbates price action. So when futures, so let's say price is going up, once this open interest starts increasing, we'll be going up by more, sharper, and longer. On the contrary, if there was World War III and prices was crashing and open interest was rising, that would basically mean that we would fall faster, longer, and quicker. So we can see here open funding is still extremely low. This is basically showing me that the market for the entire year, right, has been spot driven. All this price action is completely spot driven, and it's proven by on-chain data to not be well, basically to be spot driven and not driven by the futures market. We can see here that funding rates are negative. Usually the market is incorrect, and this is one of the reasons why I believe we have sideways chop to basically force liquidate all the shorts. So I recommend you guys do your homework on charts.checkonchain.com, as you'll get a big edge on people that just do TA. Okay, so they're my tweet strings from here. What else did I tweet? Oh, yes, I tweeted about world debt hitting all-time highs of 324 trillion. Okay. What is this? Why did I retweet this? Okay, so in the short term, I expect price action to be a little bit choppy. I don't expect the market to boom overnight, though I am bullish into Q3. Unfortunately, the preliminary and final GDP and consumer spending were lower than expected as of the 26th. Powell has said at some point we will resume rate cuts. If you go to, what's the website called? Is it Forex Factory? I forget which is the exact website, but the market is basically priced in I believe, 83% likelihood of rate cuts within the next 2 quarters. I can't be bothered finding where I got it from, but I believe it was this website. Okay, so the next thing that I wanted to look at was stealth QE. It's basically stealth printing in the market. There is a possibility that the Fed is quietly shifting its stance like it did in 2020 without alerting the public. They proposed, big ups to Alexander Lorenzo. I'm going to shout out Alexander Lorenzo. Alexander Lorenzo. Probably about 70% of the information that I put out publicly is aggregated through public information. And about 30% is aggregated through private information. So yeah, I got this from Alexander Lorenzo. Basically, they proposed loosening of something called the SLR, which is something I've recently learned about, which is supplementary leveraged ratio. We're expecting interest rates to be cut from 4.25 to 4.5% by 3.9% by the end of the year. So what do they mean by this? They basically, what are my notes on this? So the SLR is a regulation introduced after the 2008 financial crisis to ensure banks hold enough capital to cover potential losses. They basically include, it doesn't sound like a lot, like 3 to 5% of reserves, but they're thinking about reducing this to 1.4%, which could potentially increase the balance sheet of the Fed by up to $6 trillion. It's basically a policy. Policy change, so banks have the ability to raise additional capital and boost profitability by increasing leverage in a time where, as I've showed you on charts.checkonchain.com, the leverage is extremely low. So understand that as the market moves between cycles, you will find that there will be policy changes to help the movement of the market, which right now isn't futures based, right? It's spot based and mainly institutional capital, because retail has still not come in yet. Okay, so I think that's everything on the tweets. Let's move over to some technicals. Okay, I'm gonna stick my indicators on. RSI, MACD, and then want to include the DMI as well. So let's see what we have in the market. So SIXRE, which is representative of global real estate. Again, this low here is representative of what? Representative of the tariffs. Always remember that. We are very, very far from, well, not very, very far, but we're still far off piercing the start of the year highs. And I believe that we are going to break this downtrend. In fact, we are breaking this downtrend now, which will be reflective in the rest of the market. So very positive. M2 climbing up, which is just the money supply. This is good. US 10-year yields, which is the interest on American government bonds when locked up for 10 years, is continually on a downtrend, which is good for risk on assets on the 10 years. Also continuing a downtrend since the start of the year. This actually seems like a multi-year downtrend since October 2023. So this is in line with risk on assets. The 2-year is also declining, which is again good for risk on assets, and it's good that the inverted yield curve, whereby there was a period where the shorter yields offered more interest than the longer yields, which is very worrying. This has now sorted itself out, so this is good. The global stock market is ripping at all-time highs, mainly because of the PBOC, which is the People's Bank of China, adding liquidity, and also the ECB, which is the European Central Bank, dropping their interest rates. Usually America leads the way. It's not been the case for this cycle, which has made it very, very confusing. And a lot of people don't understand why the market is rising whilst monetary policy in America is not so favorable. That's because the rest of the world is pushing liquidity. When America finally joins in, we'll go to fucking Valhalla in global risk on assets. Even the UK is at all-time highs. This is, of course, reflection of DXY going down because euros and pounds have been outperforming, interestingly enough, the dollar as of this year. Gold, I believe, has now reached its all-time high. It's very interesting if you pay attention that every single normie, every single NPC that doesn't understand investing is talking about buying gold. This is because gold has been on an exponential bull run since October 2023. It's usually, I will predict that we will get more and more people talking about buying gold. We'll get more and more adverts buying gold, but gold will continue to decline and basically chop. I think gold will chop and go sideways for the rest of the year. I don't think gold's gonna I don't think gold is going to go back to the all-time high this year. That's a huge prediction. We have failed to pierce this triple top, and everything in the world is telling me to be risk on. We can even see here on my technicals that we're getting strong bloody red flashes on the MACD, and we're getting a crossover on the DMI as well. So yeah, that's gold. Silver, as an alternative safe haven, I do believe money is climbing into silver. We're making higher highs. There's like a 10 to 15x difference between gold and silver. I believe silver's going to rise a lot this year. Apple, unfortunately, due to market sentiment of lack of innovation, is performing terribly and has been declining and making lower highs through the whole of 2025. This shows me, you know what? Apple declining is actually a very, very bullish sign for risk on assets because it's basically the market saying we want to invest in something else now. So this is all in confluence with my super bullish biases. Meta, of course, is at all-time highs. Zuck's taking over the world right now. He's kissing the ring with Donald Trump. And they recently acquired, I can't remember which AI company, but basically the AI company that have data harvested all their competitors, something along those lines. Snapchat stock, this is a stock that I have all my clients have a position in. You may want to consider getting a position in Snapchat, but understand that this is a mean reverting, not trend following stock, in the sense that I believe it's highly undervalued and not financial advice, guaranteed to at some point double, but when reserve is yet to be known. Google, I believe, is mean reverting and trending back to all-time highs. Microsoft stock, absolutely killing at all-time highs right now. I wouldn't buy right now. It's way overvalued in my opinion. I think you should wait for Microsoft stock. If anyone looking for an entry, maybe around 420. Nvidia, again, pushing all-time highs. You always want to think, right? Basically, if all the money's here is in AI, where is money going to go next to? I'm going to call it it's one of my Current stock portfolios. I do believe the AMD is next up. One sec. So apply this fundamental knowledge to crypto, right? When you see something go up by a lot, think, is this going to continue to go up? A lot of the times, not by much. And where is the next protocol of where money's going to flow? So Nvidia and AMD being the second biggest chip manufacturer, they had the same low, right? Everyone had the same low. AMD's high was here in March. Nvidia's high was here in March. Of course, it was more sexy to invest in Nvidia, right? Which is why they've had the uptrend. But this looks like an uptrend to me. This looks like an uptrend to me in the short term, and in the long term, this looks like a mean reverting trend towards the all-time high. Not financial advice, but think about these kind of patterns in any asset you're investing in. Okay, so Amazon seems to be mean reverting back to the high. Coinbase, again, we've covered enough Coinbase. Riot blockchain, I believe, is a great consolidating investment if you can hold for the long term. I do expect this to, I'm not necessarily saying going to $80, but this is basically the start of the previous bull market. Do I think we're going to get candles like this again? Yes, I believe so, as Riot is one of the most biggest Bitcoin miners in the world. This is basically in the stock market what I like to call artificial price compression, because everything about this company in terms of fundamentals is very, very strong. Okay, so let's have a look at the crypto market. We are still mean reverting back to all-time highs, and I believe people are not ready for these candlesticks that can come at any moment. When are they going to come? Sometime in Q3. This is why I believe that loading up on your alts is very important. Now, what I'm going to do is I'm just going to compare crypto total market cap to crypto total 2, which is all the money in crypto minus Bitcoin, and then crypto 3, which is all the money in crypto minus Bitcoin and Ethereum. Okay, and just make all of these clear. Notice how there is a flow in money. There's one thing I want you guys to take away in this webinar is to be able to identify the flows in money. Okay, so total will lead the way because Bitcoin is leading the way, right? From the highs, we're about 12%. On total 2, which is money in Bitcoin, money crypto minus Bitcoin, right? Notice there's 3.27 trillion here, 1.1 trillion here. Notice how we are far further from the high, we're about 50%. Same goes with total 3, right? So we expect money to flow. We expect this to go to all-time high. We expect this to go to all-time high and this to go to all-time high. In the midst of this going to all-time high and beyond, this is where we make crazy money if we position ourselves correctly. So let's have a look at altcoins. You know what? You guys have been very, very patient in the background. I've been talking for like a whole hour straight. Let me take some questions. I'm going to have to shoot. Got to be 5:36 live. I have to go. Thanks. Okay. Does anyone have a dying question before I go into some alts? It will be appropriate for this replay.
No.
Okay. Sorry, someone want to say something? No? Okay, cool. So, what is the greatest risk to reward return investment in the world right now? I believe it is Ethereum. Do I think there is not better, more lucrative investments in the market that will give you a higher potential beta? Yes, it is possible. However, I believe that Ethereum is basically at this place where this is one of the easiest percentage gains possible in the market. We basically have I know what the word for 3 is, and that's triple, and 4 is quadruple. I don't know what the word for 5 and 6 are, right? But this is basically a 6 times top from this cycle and the previous cycle, which we are ready to send to in so many confluences, including but not limited to technical, geopolitical, monetary policy, in line with quantitative biased research on the accumulation of the asset in ETFs. Ethereum has the best risk and reward ratio, in my opinion. Now, I believe that there is a possibility that Ethereum could touch this low, right? 2,100. We may range between 2.1 and 2.8, but when we break this, we will almost indefinitely go back to 4K and beyond. So this is the best risk and reward investment in the market, in my opinion. Second to that, my pick is Dogecoin. Though I believe there is a possibility for it to go down to 13 cents, what I see in Dogecoin is that I see a long-term trend line here. I can see a breakout in the MACD, basically the first signs of bearish exhaustion and the first signs of bullish momentum on the 3-day versus the daily. The daily has recently just broke out here. I'm very, very excited on Dogecoin. In fact, if you told me to invest in two assets in the market, it would be Dogecoin and Ethereum for the best risk reward returns. You see Dogecoin here is 50% from the high in May, and nearly 3x from the high at the end of the year. So this is a very, very exciting time for Dogecoin, in my opinion. And then, of course, we have the seasonality of Solana, which I can see is breaking towards the upside and is very, very far from the high, nearly 2x high from the high at the start of the year. Again, this has obviously been a very, very brutal year. We obviously, along with most people, expected, this pullback and then for us to go to Valhalla. This has not been the case. I do not want you guys to be, put off by the market just because we've had a delay in price action. But I really need you guys to think about positioning and being risk on. I don't want to speak for hours and hours and hours. I could honestly go on for longer. I could go on to the CNN sentiment chart. I could go into different metrics. Hopefully, I've gave you guys enough information within this hour. I could go over some more individual assets. I mean, SUI is looking great right now. On the daily, we've got the crossover between the blue and the orange and the MACD. If I switch over to the DMI, 1 second, settings. If I switch over here to the DMI, okay, we've not got the crossover yet. What about the 12 hours? Okay, the 12 hours we can see here on the DMI, we're just about to cross on SUI. This makes me really, really tempted actually to go do a leverage trade on SUI. If we go back to this high here on the 11th of June, which feels like yesterday, that was basically my birthday. We're 22% high from here. Just to give a trade idea, let's say we did a 4x leverage here, we could do 100% on this rise. Not financial advice saying someone should do that, but it's just it's just an idea. I don't think I need to go through individual assets. I think I've covered enough. What I'm going to do is that I'm going to go off recording and then talk to everyone here on this Zoom about meme coins. And then, yeah, I think that's been a good webinar for today. Before I go and talk to you guys about meme coins, does anybody have a worthy question that you think would be great to ask on stream for somebody watching the replay? It can be about anything at all. Don't be shy, guys. Alien, I know it's your first stream, but we welcome beginners and people of all skill sets.
No, I've got nothing for you.
Okay. What about Ali? Ali, you there? No? Okay. Ken, Salman? All right,
No,
they're being
I'm
shy.
okay.
Guys, I want to start.
No stand up.
Cool. I'm going to start.